Really great to have you here on this program. I look at the data that came out of your company, the data that came out of your competitors, MasterCard, American Express, even Capital One. It all seems to suggest the same thing. People are spending, and people are spending at levels that are much higher than what they were doing maybe a year or so ago. But then people look at the macroeconomic backdrop and they say, how long can this last? Is this just rich people who have the cash to be able to spend doing this? And what happens to the folks who are at the lower end of the income spectrum?
Well, as you saw, spending has been very stable globally for the last 4 quarters. And we like to look at numbers indexed to 2019 pre-COVID. And it's indexing in the 140s in the US. It's indexing in the 140s outside the US. And it's been very stable. And we've looked at, tiers. We've looked at lower income people, affluent cardholders, etc. Spending has been quite strong at all levels of income. And we find the affluent cardholder coming back and spending on discretionary items like travel, restaurants, entertainment. In Europe, for example, ex-UK, we saw 36% growth year over year, 54% versus 2019. So there's no evidence at this point in any of our numbers that there's any pullback or any loss of confidence or any slowdown in any general part of the economy. High income, low income, across categories, very stable. So far, so good.
I think what's interesting is we've been talking a lot on this program about the same dollars, but just shifting the way we are spending it from goods now back into services. Are you seeing those trends, or are we still equally buying lots of everything?
Yes, in fact, that is very much the case. Historically, pre-pandemic, in our spend, and of course we see a lot of the spend, services were a higher part of the mix than product and goods. As the pandemic happened, as you know, services dipped and goods became a much bigger component. In the last few quarters, we've seen services come back, and today it's about 50-50. So there's no question there's been some shift back to services, and it's probably going to go back to where it was and normalize. And then discretionary spend, travel, restaurants, entertainment, those things have been coming back in a very, very big way. Travel being one of the biggest categories for us when it relates to both domestic and cross-border has been a massive recovery in the last few months. The world's opening up, massive pent-up demand for travel. Travel's come back in a very big way.
And so it was broadly, you beat expectations across the board, but you did see analysts from Mizuho, for example, flag that it looked like U.S. debit was slowing a little bit, the growth there. I'm curious if there's any read-through from that into, the state of the U.S. consumer beyond what you've walked through.
Well, I mean, if you look at the numbers, we indexed at 53% above last year in the second quarter, about 2019 in the second quarter. 54%, through the first 3 weeks of April. You really can't compare to last year because there was a huge amount of stimulus spending going on. Checks were going out in April. So we like to look at the index pre-COVID because it's clean, it's easier to interpret. There's no evidence whatsoever of a slowdown in credit. Credit is growing much faster than it was pre-pandemic. There's been a massive amount of digitization of cash, more people using digital forms of payment, and we're seeing that globally. And debit is the biggest beneficiary of that because the first vehicle or the first device people use to start using digital forms of payment is by using their debit credential. So far debit has been very resilient, even as credit has come back, even as the world has normalized.
Let's talk, Vasant, about kind of the structure of some of your business beyond just what people are spending overall. There's been a lot of discussion about the swipe fees that retailers have to pay every time that someone like me goes and buys something. We know that there's been a lot of pushback by a coalition of retailers to either cut the fees or eliminate them altogether. And we know that there's been a lot of discussions in Congress now about some of the antitrust implications of this. Are you in negotiation right now with any of the major retail groups about reducing or eliminating these fees?
We have regular discussions with various merchants. We just finished extending our agreement with Amazon recently. That's routine, that happens all the time. It's important to note that what a merchant pays We take a very small sliver of it. A big portion of it is what's called interchange that goes to our issuing banks. Another portion of it goes to the acquirer that the merchant has, the acquiring bank that the merchant has. So it's, the Visa component is a small piece. And, this is something that is done as fairly as we can across all merchant categories. And we'll continue to talk to people about it.
Have any of the major regulators here in the United States contacted you in a formal manner about this at all?
We always have contacts with regulators, with various, governmental entities. We have questions, we respond to them. We are in compliance with all the laws and regulations. That's an ongoing conversation. It's one we've always had. And we have it not just in the US, we have it around the world.
Can we talk about how you're thinking about the economy around the world as well? European central banker has been guiding us, of course, a lot closer to a recession, perhaps, than maybe here in the U.S. Are you seeing a slowdown in the European and the global consumer?
At this point, no signs of a slowdown. At this point, as you look around the world, things have been remarkably stable. And the best way to look at it is to compare it to where the trends are relative to where they were pre-COVID, because there's a lot of noise when you compare to last year, because you had things recovering, you had stimulus payments, etc. You do need to look past the noise and look at where are we and where have we been for the last 3 or 4 quarters relative to where things were pre-COVID. And it's been surprisingly stable, very stable, and really no indications yet that there's any slowdown or pullback in the US, in Europe, most parts of the world. The only places where we see impact is where governments impose COVID restrictions, and that is only in some parts of Asia, a few countries in Asia. Wherever economies are open, spending has been very strong and very stable for quite a while.